Hi, welcome to another episode of Passion for Property with me, Manni Chopra. And today's guest is a RICS chartered surveyor, someone who runs her own commercial agency. She has an amazing work-life balance, and she knows the real meaning of financial freedom. Please welcome Kirsty Darkins.
Thank you, Manni. Nice
Hi,
to be here.
you too. Thank you for coming. So, Kirsty, tell us all about how it all began. And I know you work for the likes of CBRE, Boots, Hammerson, and I'm sure other large commercial agencies. Tell us what was life like in the corporate world and what made you decide to switch.
So I learnt a lot in the corporate world, and I loved my job for a really, really long time until I didn't. So I worked so hard, like most of us do. I got really burned out. I didn't feel valued. So the hours I was doing, if you dialed it back to what I got paid and what I was making the company, they didn't add up. They didn't stack, as we'd say, as property investors. And I had a lot of money in the bank, but I wasn't enjoying my life. And I wasn't getting to travel. I wasn't spending enough time with friends and family. My relationship was in tatters. My health wasn't in a great place. And that's where I was in corporate and at the end. And also I became more senior, and I actually like grassroots surveying. I like being a property investor. I like doing the
deals.
And I was just managing people, sitting in boardrooms, sitting in meetings. I was like, I don't like the view from up here. So that's where I got to in corporate, that it just didn't work for me. It wasn't what I wanted.
But that's great. You came to that realization. And what actually, did you, I know you mentioned earlier you took a sabbatical. What was that the turning point?
Yeah. So when I'd done what I came to do at Boots, I'd been there 5 years, and I had a new boss who I wasn't really getting on with that well. And I thought, I'm so tired. And look, I've got all this money in the bank and I haven't been on a decent trip, because I love travel, for years. So I took a sabbatical. I travelled Europe for 8 weeks on my own. And that was the first time I travelled on my own as well. And I learned a lot about myself. I got really fit. So I was the healthiest I'd been for a long time. I spent loads of time with friends and family. And I just had time to sit and think about, what do I really want life to look like? What do I want to do? But then I ran out of money, so I had to go back to work for a while. But it taught me a lot, and it showed me a different way. So it gave me a taste of freedom, time freedom, and flexibility and choice over what I got up and what I did every day. And that's when I realised that that's how I wanted to live my life.
And it's weird, right? Because and that includes myself, we don't spend enough time actually asking ourselves, what is it that we want? Yeah. What is it that we actually enjoy? We're on this treadmill and we keep going, and we think the busier we are, the better it is. And we look for more deals, and we keep, like I said, on the hamster wheel. But it's amazing that you actually took the time out, did the sabbatical, and actually found yourself, or found what made you happy, and took that bold step, which most of us dread and think about it for years. And some of us do it, but some of us don't, right? So hats off to you. Kudos for doing it. And so then what happened? So
Well, I went back to work because I spent all my money.
And then
so I was like, okay, I've had enough fun now. I have to actually get serious and go back to work.
Back to being an adult again.
I went back to the company that I started, CBRE. I started there as a graduate, but I went back in a much more senior role. And after 6 months of being back, I knew I couldn't do it for long. So I stayed long enough to build up some more funds. And then on the 22nd of December 2015, I handed in my notice. My MD said, "Where are you going?" Because they always think you're going to a competitor. I said, "I'm not going anywhere." "What do you mean?" I said, "I'm going to set up on my own." "Oh, okay. Well, how's that going to work?
What are you going to do?
And I said, "I don't exactly know yet. That's all I know." And he said, "Well, you're lucky." I said, "We make our own luck." And then I took 6 months off. I had savings in the bank, worked out what I wanted that to look like, and the rest came from there.
Wow. So what do those first 6 months look like then, once you've just handed your notice in and you kind of, Christmas is obviously, get Christmas out of the way, and then you're thinking 1st of January 2016 or 2nd, whatever it is.
Oh, 1st of January, I was thinking, I don't have to go into that corporate office. I don't have to do anything. I can do what I like.
So no panic stations, no nothing.
No, I was more excited than panicked. I had enough money in the bank to live for 18 months. So I worked out I wanted to start investing in property myself. How am I going to do that? I knew I wanted to set up my agency. So I started setting that up. I set up a property network so that I could build a network quickly of property investors and other contacts, which has served me very well in the end. But it was very hard work. You host a great property network, and it's a lot of work.
It is. It seems very like, just turn up and deliver those talks.
Everybody else just turns up. But it's curating the speakers, all of that. But that gave me a big profile that I otherwise wouldn't have had. So it was a bit of a springboard.
And people got to know you very quickly.
Yeah. So I changed my network. So I got my professional network, but that wasn't going to help me invest in property.
Yeah.
So I built this other...
you thought, is that what you thought back then?
Well, that's what I thought, yeah. And also I thought, well, where am I going to get clients from? So yes, I can get clients from my corporate background, but actually what I really wanted to do was start helping private individuals. I didn't want to help pension funds, faceless institutions, the big corporates. Yeah. I didn't want to do that. I wanted to help individual people live the life that they want to live, because that's what I was trying to do for myself.
Yeah.
So I built that network. I started investing in property, but I actually started investing in serviced accommodation first.
Why?
Probably because I did what happens, I think, to a lot of us, and I got a bit swept up in the thing of the day.
Yeah. And the strategy of the time. Yeah.
And a lot of people around me were doing it, and I knew I could learn from them. And I think the most important thing for me was to just start investing.
Yeah.
And it didn't really matter what I was investing in, as long as I'd started investing in property myself.
Yeah.
I didn't have a lot of capital to invest, so I did it the rent to rent way, which worked back in 2016.
Yeah.
And I quickly replaced my income with that. Yeah. So quickly, like within 18 months, I'd replaced my income.
And you knew that because you had the money just enough for 18 months, but now you built up this cash and you're thinking, well, but then someone else looking at you, and I'm thinking, now that you're telling me your story, Rick's chartered surveyor and started doing service accommodation and rent and residential, and you're like, why? I think it was a mindset.
It's mindset. So I came out of corporate having mostly worked with multi-billion-pound firms and pension funds and developers, and at the very high level of the market, the prime end, prime shopping centres, huge logistics parks, massive city centre office buildings. My mind was going, well, you can't invest in commercial property.
You're not buying a shopping centre right now, are you?
How are you going to fund a shopping centre? So I was limited by my mindset.
Yes.
And I thought I was limited by the capital that I had available. And so, it took a long time to shift that mindset. And it actually took spending time on a retreat with investors who were more experienced than me. So I was the least experienced person in that room. I was really scared. I felt like a complete imposter because everyone else was much more experienced, had a big portfolio. They were 10, 15, even 20 years older than me. I was going, what am I doing in this room? But that's where you want to put yourself. Yeah. You want to stretch. And that's the best room I've ever been in.
So what happened in that room?
Left. Well, what happened in that room is that they wouldn't let me make excuses, and they asked really, really good questions, and their experience, like they could objectively see what I couldn't.
Yeah.
And they just wouldn't stop asking me why I wasn't investing in commercial till we got to the real answer. And it was mindset.
Yeah.
It was mindset.
Titans is a property education and collaborative platform, which is effectively a community of property professionals, investors, developers who like to come together, connect, engage, and help grow each other's businesses. Find out more, teamtitans.co.uk. And another thing you specifically talked about, you thought lack of capital, and also, as you said, you weren't sure how you could transfer those bigger deals into a smaller sort of commercial buying asset management kind of business.
Yeah.
And that day was the first day of your commercial.
Yeah, that was pivotal. So that was out in Monaco. Then we went to the Monaco Grand Prix and had a great old time. And I can tell you, I left that 2-week retreat a different person.
Yeah.
And sometimes you've got to step off and step out and go somewhere different with some people who don't know you, who can see what you really want to get some help. And then you come home and you go, oh, now I can see. Now I know what I need to do.
And it's so weird, right? Like you've got all this knowledge, all this experience, and you still couldn't see it because you were, on your own really effectively, and no one to guide you or anything. So that's so important. Like mentoring, coaching is, equally important in our lives, right?
Well, it is, because most of my friends and family were still at the stage of, what are you doing? Like, isn't this all really risky?
You're making so much money. You're a surveyor. You've got this route set up for you. You've got this life ahead of you, amazing life where you can be so rich and make, and you're like, no, I'm going to give it all up.
No, because life's not rich if you have no time to live it, right?
And I love that.
And that's me. So I'm like, rich isn't all about money.
Yeah. Wealth is different, right? Wealth, rich is, but the thing is, we associate that with just money, right? Yeah. Wealth is more the web of life, isn't it?
It's time and it's health. So if you don't feel good, what's the point?
Yeah.
And if you have no time to enjoy all that money that you make, or enjoy it with the people who you make it for, what's the point?
Yeah, and I love that about you, the fact that you've already got this work-life balance, lifestyle and freedom. And we'll talk about that more later. But let's talk about your initial thing. So you had this epiphany.
Yes.
I got it.
That light bulb moment.
That's it. So what next? How did you then apply that into your own commercial investment life?
I used the network that I'd built to find my first investor.
Nice.
So that's what we decided.
So it was not of nothing, it was of some use.
Yes. So we decided that I needed investors so that I could start. And I committed to finding my first commercial property investment within 3 months of that retreat. And I did.
Brilliant. And what, if you don't mind me sharing, what was that first deal look like?
It was a small property, because I wanted to start small and just prove to myself that I could
the principles work in your,
Because I tell you what, even as a professional surveyor investing clients at the multi-million billion level of the market for 17, 18 years by that point, when it's your money or you're working with someone else's money and it's for you, it's a completely different mindset.
And especially your first one, right? You wanted to 100% make sure you get the investors' money back. But anyway, so going back to that JV deal, was it a JV where you took a loan, or did you do a joint profit share thing? What was the, if you don't mind me sharing?
It was a loan. So it was a straight loan for interest. So I was in control. And I bought a little property in a small Staffordshire town on a high street. So it was always going to be retail. Because retail was always my favourite sector. It still is. It'll always be my baby. I like the other sectors, but retail's where I live. And that's because I like variety myself, and I like pace, and and that's what retail is. So I bought 2 shops with a vacant office above and a workshop at the rear and a 6-space car park. That's what I bought.
Okay.
And it was 12% return on purchase.
Oh, so it was fully let?
So it was the office was vacant, but the other 3 were let.
So what were your plans with the office?
So it was to asset manage it, not develop it.
Okay.
So I wanted to keep it all commercial.
Yeah.
It was £10,500 income straight off the 12%, but it had really short leases. So you had to buy it cash because the leases were really, really short. So I renewed those 2 leases onto new 5-year leases.
Yeah.
I did a very light refurb. Well, I say I didn't. I got someone else to do a very light refurb for £3,000 on the offices. And then we let the offices during COVID for 5 years to a financial services firm, because they knew that COVID would end and they needed space, and the director didn't want to work from home during COVID. So he went to the office when he could.
Yeah. By himself.
Yeah. So we let that added value. We relet the workshop at the back. And at the end, the rent had gone up to $16,100 per annum. And that was a 19%
yield.
Return.
Amazing. And you added, how much value did you add in the?
We doubled the value of the property. Well, more than doubled. So I bought it for $87,500 and I sold it for $190,000.
Oh, and you actually redone the leases, added the value, and then sold it.
I sold it because COVID happened and there was no lending. Yeah. So there was no commercial lending for 18 months.
Right.
So in order to pay the investor out, the only option I had
to sell it
was to sell it and take the equity. So that's what I did. But then I had my own money.
Yes, and also the fact that you've already proven that it can happen in smaller deals.
Yeah,
what you were
absolutely.
doing in bigger deals. The exact same principles apply on, a really small deal and doubling the money, probably a little bit more than that. That's an amazing first deal. And the fact that I've got this resi mindset, which I need to keep changing. You don't need to develop anything. You just need to, like you said, commercial repurpose it basically to
paper exercises. That's what I call it. So asset management is effectively paper exercises with leases and tenancies, and you can add as much value as doing development work. And so there's a different way.
Yeah.
So, you can do development work to add value, but there's another way to do it in commercial as well. And that's where I focus.
And also, like you said, residential now, especially in this, as you know, and we're not going to talk about it too much, but we know that there's a war on landlords, there's a war on property entrepreneurs, on investors, everyone. And residential doesn't really seem to be it's not the right time in the market anyway. If things change, but then there's renters' rights bill have just become law, or it's going to get royal assent very soon. It doesn't look very good for residential landlords. So I think commercial seems to be an amazing opportunity right now. So going back then to that first deal, you then had your own money, and then did you just continue to invest in such deals?
Yeah. So we built from there. So we did another 2, and then I met my business partner. He's a builder and project manager. He wanted to do some development, and I thought, okay. Well, I would never have done development by myself, but with his skill set and my skill set. So he wanted to do commercial development, but he didn't understand commercial and I didn't understand development. Yeah. So we put our skill sets together and created WEM Commercial. And, we've done 7 projects together since 2020.
So what does that look like?
So now
what's a typical deal look like?
Well, we did do some mixed use.
Yeah.
But always sold off the resi because we're not set up to manage residential tenancies. And then we decided that actually we didn't want to even do any more mixed use because the market was changing. Yeah. And we decided commercial to commercial development was
back
what
to
we
commercial
wanted to
to
do.
commercial. But when you say development, so going back to that first thing, when you said you were doing commercial to mixed use development, were you doing like Class E conversions, PD?
So we were keeping the ground floor commercial.
Yeah.
And then we were creating flats.
Apartments.
In the uppers.
Yeah. And then selling the apartments.
Yeah. So we did 2 of those and then said, right, we don't want to do any more of those. We just want to do pure commercial. So we bought an industrial unit and split it up into 6 units rather than 1, which intensifies the use, hugely increases the rental income, increases the value. So we did that. What was the next deal that we did? Then we bought a high street branded unit. So we got Greg's as a tenant. They've now taken double the space on the ground floor and given us a new 10-year lease. And we've got the first floor that we can develop into commercial or residential, our preference commercial. So we started doing commercial to commercial development because actually that's easier than mixed use.
And that's what it's your bread and butter, right?
And it's what we know, yeah.
So let's talk about the various sectors, and commercial is a massive umbrella, right? And you talked about industrial, so maybe we can start off with that. I don't really know much about industrial. It would be great to learn, and this is one of my things I want to do for the next 12 months. So tell us all about this industrial, sounds like industrial HMO effectively.
Yeah, so we call it a CMO. So commercial multiple occupancy. So it was...
how large was it roughly?
It was 6,000 square feet. So I'm a surveyor, so I talk in square feet.
Square feet is great. I love square feet. I'm happy with that.
We're dinosaurs. We haven't followed everybody else. We're not metric. So 6,000 square feet. It was owner occupied for 25 years. Yeah. He sold the business and retired and then just had a vacant property. Yeah. So if you had bought that building and let it all to one tenant, you might have achieved about £28,000 in rent a year and something like 8 or 9% return. Yeah. So we split it up into 6 units and the rent roll was £54,000 a year. So you can see that's the uplift.
Double, literally double. Yeah.
You've diversified the investment because you've got multiple tenants in one building. So that mitigates risk. Which makes it more valuable. And so that's what we did with that industrial unit. But you can also take industrial units in this market. A lot of industrial is under rented. So industrial rents have grown 20 to 30% over the last 3 to 4 years.
And industrial rents, are they different for different locations?
Yes.
So you have to know for that area that you want to invest in, what is the average industrial rent?
Yeah.
So when you do see something that comes up and says, oh, this is under rented, that's the kind of thing that you need to be good at, right? But going back to industrial, what sort of businesses are in industrial then? Are they light industrial businesses doing manufacturing and some process?
Well, many of it, so they're two different. So you've got light industrial, which is, it can be anything from a furniture workshop to an industrial fan repair company.
Painting, rubber. I remember there was a rubber processing thing.
Workshop units. And then you've got the manufacturing sector, which is a different sector. And then you've got logistics. So there's lots of different sectors within industrial. And you've got to know what sector you're in and where the demand comes from. You can work all that out from your commercial agents that are active in the area.
Right. And so this one was, when you said owner-occupier, he was just an industrial, what was he, just running
his
office?
His business was pool tables and slot machines. And he used to send those out all across the country. He sold his business, split it in half. And so the two businesses that bought half his business didn't need this
space
unit.
And the 6 different businesses that you rented out to, did you find them yourself or did you?
We did. We used Rightmove Commercial and did those lettings ourselves. And that's because we were still on site, so we could do the viewings. We've just relet one of the units and we used a local agent for that because we're not there anymore.
So either way, you can use the same old on the market or do it yourself or agency.
Yeah.
Right. Okay, so that's industrial. But going back to, say, for example, offices, it's gone through a huge transformation since you started, right?
Yes.
So working from home, now back to work. What is the opportunity right now in office spaces?
The opportunity right now is that most people don't realise how strongly the occupier market, so the tenant market in offices, has come back in the last 6 months. And therefore, what that means for the opportunity to buy really well, because we're in a buyer's market, the values are still low.
Yeah.
There's still a lot of uncertainty. There's still a lot of low confidence with offices. So you can buy some really high yielding, strong office investments right now in the areas that rents are rising. So a lot of office rents are rising, which a lot of people don't realise either. So we as an agency have agreed 5 office investment deals in the last 4 months. And those are the first office investment deals we've agreed for 5 years.
So nothing for 5 years because nobody was interested in buying offices.
Right.
But now you've got these, you're acquiring for other investors, presumably, and you're acquiring 5 new offices. So these are vacant office buildings?
No, they're always tenanted. So in this market, I wouldn't buy any building vacant.
Unless you're doing it for development.
Yeah. So we're not doing development at the moment. We're focusing purely on asset management.
So you're buying, let's say, give a typical one of those 5 deals. Let's pick one of those deals, which are good.
Okay. So we've agreed one which is owned by a firm of solicitors who've decided to downsize their offices and they don't want to own the building anymore.
Right.
So they're taking a lease of the basement, which they've refurbished. That's the hardest space to get away. Great. New 5-year lease.
And they're happy with that?
Established firm of solicitors, good covenant. Great. They've let the ground and the first floor to a bridal company on a new 10-year lease. So that's away and your rental income's coming in. They've refurbished the second and the third floor. Now, a lot of people's heads in the private investor space would go, oh, residential conversion. And it might stack because the resi values are there. It's in the south. But why bother is my question. Yeah. So it's already on the market to let. It's got viewings. The demand is there. It's in the office core of the city that it's in. All you need to do is let those 2 offices and you will uplift your capital value by 40%. So that investor will make £350,000 from doing 2 office lettings.
Wow. So buying it, I don't know if you know the numbers or...
So buying it at 775, although I think we're just about to chip that because we've had a building survey and there's some work needs doing. So
okay, so let's say buying at 700, let's say for example.
Let's say 700. The immediate return will be 7.5% on the income that's already coming in.
Yeah.
So you've got income from day one.
Yes, exactly.
I like income from day one.
Day one, absolutely.
And then it probably take 3 to 4 months.
Maximum 6 months, let's say.
Maximum 6 months to get those other 2 floors income producing.
Yeah.
Then it will be over a 12% income return.
Yeah.
And they will have added 350,000 to the value, so you'll be over $1 million.
So they could pretty much remove all the money that they've put into the deal out, because it's typically, if you're for something like this, for example, would you get funding?
Not at the moment, no, because half the building is vacant.
Oh, so you wouldn't. So any vacant building, because obviously we look at it from a resi, so we take bridging and development loans. But from a commercial angle, then there aren't any lenders who would lend on a part-let building. Or there are?
Not at a rate that will work for you.
So you can, but very high rate. Yeah.
So you get a low loan to value. You might get 50% loan to value, and your interest rate will probably be 10%.
Yeah.
In the current market, and that's difficult to make stack.
Absolutely.
So you're better off being cash on the way in.
Yes.
So that was at that end of the market, and then a bit lower value. We've just agreed one at 300,000.
Okay.
Up in the northeast. That's 2 offices on a modern office park.
Yeah.
The tenant wants to vacate at the end of their lease, which is in 15 months' time.
Yeah.
Rents have gone up. So again, it's tenanted. You've got income from day one. It's 10.7% on purchase.
Right.
With nothing to do immediately.
Yeah.
That tenant has to pay dilapidations to come out of that building. So they're going to put it back into a great state of repair.
Yeah.
And you've got 15 months to find 1 or 2 new tenants, because you could let it as a whole or separately as 2 offices.
Right.
And your rent is going to increase.
Yes.
So once you've done all of that in the next 12 months, and we know the demand is there, you will have added 6 figures to that building just by letting. Yes, because you're buying in commercial, it's all about investment value. So the shorter the lease, the lower the value of the property.
Yes. And so you'll have a surveyor coming in and doing the valuing it as it is with the current leases.
Yeah.
Okay. And that's 300 grand for now. Yeah. So someone's going to buy it with cash, 300 grand, or your client
you could bridge, but that's expensive. So most of our clients are buying with cash.
Then you obviously start to put the word out, go to agency. Your agency can do it, or you can get it on Rightmove, wherever you get new tenants with higher price rents per square foot.
Higher rents. They take a new 5 to 10 year lease. And then you've added over 6 figures of value. So the end value should be 410, 420.
Yeah.
And all you've done is asked a local surveyor to relet a property.
That's it.
And that's how you add the value.
So you add up 120 grand on it.
And then your rental, your return will be nearly 12%.
I mean, okay, we put it on its head. HMOs are not getting 12% once you put all the bills in, all the headaches, the arrears, the aggro, the stress that goes with it, right? So it's a no-brainer, really, commercial property, adding £100,000 without doing anything, just signing some new leases and doing, as you said, paperwork.
I mean, the caveat is you need to be willing to hold for 12 to 18 months at the moment.
Yes.
Because the interest rates are still quite high.
Yes.
It doesn't make your net cash flow very attractive.
Yeah.
And lenders are only lending on vacant possession value. So we need to wait for confidence to return to the economy and there'll be less uncertainty. And then your refinance option will look better. So you're best at the moment to buy low.
Yeah.
Tenanted investments, so your capital's working from day one.
Yeah.
Add your value, hold it for 12 to 18 months, and then you'll have your exit options.
So the good thing, so what I'm seeing from here, there seems to be a pattern in the office. So you're looking at, as you said, short leases. Yeah. What's a typical short lease? Under 2 years?
Yeah.
So under 2 years, you're looking for something, then you're looking for the location where there is a demand from office space. And you would then, as you said, hold on to it, but while you're holding on to it, make some cash flow.
Yeah.
And then aim to add value through the whole reletting process and releasing either to the current tenant or to a new one.
Yeah, but we do have clients who just want to buy well. So your other opportunity in this market is buying at a really low value, because the values are the lowest they've been for a decade.
Yeah.
Really high income yield.
Yeah.
And then as the market recovers over the next few years, your value is going to go up with the market turning, so without you doing anything.
Yeah.
So we buy multi-let offices, so you mitigate your risk. Yeah. And again, we're buying those at between 10 and 12% return.
So you're talking about the office WeWork kind of smaller?
No, just offices that are let to limited companies or sometimes PLCs.
Yeah.
So it's like a commercial buy-to-let.
Right. Oh, okay. So are you saying, so these are fully let they're fully let, but when you say the values are low, what do you mean? What do you mean by that?
Values are low just because values are low in the market at the moment. So that's the point.
So the calculation of the rent versus, there is a calculation?
The yields are higher than they have been just because of where we are in the market. So if you buy an office at 10% today, that's got good tenants on 3 to 5 year leases or longer, you can buy it at a 10% income return.
Yeah.
In 2.5 years' time, when the market's in its recovery, people will only be able to buy those at 7 or 8% yield.
Yeah.
So you make hay while the sun shines is what we're saying.
Yes, because the yield goes down, the value goes up.
Yeah, exactly.
So, I know. So the yield is dictated by the wider economy.
That's right,
and the general demand all of that. So you're right. Right now we're at a low in the economy. So that's great. So offices seem to be an amazing investment, as you said. And so this is what we should be looking for: short leases, under rented, and also, is that it for the offices?
Yeah, but you just have to do your due diligence really, really well on the companies.
Yeah.
So the difference between residential and commercial is in residential, most of your due diligence is on the building.
Yes.
In commercial, your due diligence is on the people that occupy the building. And that's the big difference. That's a big difference.
You know? So you spend your efforts in finding out more about the business, look at the balance sheets, get your accountants to maybe even look at it.
So there was one in auction. Here's a good one. So one of our surveyors, I said to him this week, why didn't we go for that deal? Someone's bought it, look, at a 15% yield. He went, yeah, good luck to them. I said, why? He said, because I looked at the company and the parent company's doing well in the US, but the UK subsidiary made a £14 million loss into 2023 and a £213 million loss in 2024. That's not an investment it's not a business you want to invest in. Because we can't tell what's going on, but something is, and it's not good.
Yeah. So that's kind of level of detail. Research you've got to do.
That's what's important. It's not so much about the building and the location. It's much more about what's in the lease, who is the tenant, how are they performing. Yeah. That's what's important.
Yeah. And then if the tenant is in trouble, for example, this business potentially could be, then you'd completely lose the value in the building because it would be vacant.
If it becomes vacant,
then phew.
The value is going down.
Yes, absolutely. Got it. So that's offices. And I know we're coming to your favorite sector, the retail
sector.
My
baby, yes, retail.
Absolutely. And retail is quite exciting, isn't it? The whole high street itself. So do you do just high streets or do you sort of focus on other sort of leisure and...
Yeah, we do a bit of leisure, but mostly we do high
streets. And what's happening on the high street right now? Is it just a lot of repurposing? Is it a new era coming in?
Well, it depends on the high street.
Yeah.
So not all high streets are equal. Yeah. So yes, absolutely. There are some high streets that are not investable.
Yeah.
And some high streets that might not be investable again.
Yeah.
But those are usually the ones with retail parks around or where something major has happened in that town to move the pitch. But we're not looking at those. We're looking at market towns or suburban retail parades that are thriving, where there's a good mix of tenants.
Yeah.
It's well let. There's hardly any vacancy.
There might be a couple of.
We're starting to see rents rising in a lot of locations again now. Yeah. Retail's hit the bottom in a lot of locations and now it's starting to come back up. So that's quite exciting. Bit of rental growth. And retail was the best performing sector in 2024, which a lot of people might question. If you ask that question and said, out of all the sectors, most people would say industrial, but they'd be wrong. It was retail.
Wow.
Last year.
And
it'd probably be retail again this year.
Yeah. So do you think, what's happening in the retail? A lot of newer businesses coming in, a lot of small.
So you see all of the news stories about businesses closing shops and closing. But what you don't see is the news stories about the businesses that are pivoting and coming up with a new offer. So like Waterstones, for example, 3 years ago, they introduced smaller stores into smaller towns. They'd never done that before. They'd only ever been in city centres.
Yeah.
And that was a reaction to us working a hybrid model and working from home and not wanting to go into town to do what we wanted to do, but to do it in local locations.
Yes.
And then you've got lots of new entrants all the time in retail. And also a lot of retailers have now worked out that they need they need clicks and bricks.
Yes.
So they need physical stores and online. And actually, they've worked, click and collect is driving people to their physical stores. People want an experience. They want somewhere to touch and feel.
Yeah.
They want an experience, So a lot of retailers, it's a bit like the office market, have come full circle and gone, oh, actually, we do need some physical stores,
yes,
as well as
and we can't
online,
all work from home forever.
So yeah, don't get me wrong. There's some that have gone online forever, but there's many, many businesses that are using the retail space. You've also got professional services, healthcare services who now use what used to be retail space.
Yes,
it's cheaper than offices.
Yeah,
so there's all of those occupiers shoring up the high street.
Yeah, that's amazing. So obviously you've got the usual suspects, the nail bars and the hair, the barbers and all salons and all. But then, as you said, you've got all these other healthcare people like osteopaths and chiropractors and physio. And those are now coming on the high street, funnily enough, isn't it?
And solicitors and accountants and insurance brokers and, the NHS are using the high street. It's been repurposed. The use is much broader.
Yeah.
We've got Class E, which is a really broad use class as well. So
one of the best things I think Conservatives ever
that
did.
happened in 2021. And so now, an office, a restaurant, a shop, financial services,
gym, medical.
It's all in one healthcare. It's all in one use class.
That's made life a lot better. Let's put it that way. Government has done a lot of things, but one thing they did
that was a good thing. It's
an amazing thing. So, absolutely.
We've had some good legislation changes in commercial.
Yeah.
So we're lucky.
Let's talk about some not so good ones. I know business rates is one of them. And a lot of the business rates went away, I guess, over COVID. Retail struggled massively. There was no business rates,
of course,
I think.
because they all closed
down. But then obviously there was a system to it, wasn't there? There was going to come back, and now they have come back. I'm not sure if it's now back up to 50% or is it back up to 100%. What's going on in the business rate space? Because I know there seems to be a lot of demand from businesses to actually review that whole business rates situation.
It is being reviewed. So in the autumn budget last year, what happened is the government decided that they could no longer discount business rates for retailers, and so some had been on a 70% discount, and
up until last year,
until April this year, and that ended in April this year, and so they found themselves with a much bigger bill to pay since then. But what they did do as well is commit that from 2026 they are revising business rates. So it's a short-term pain issue for a lot of retailers because come April 26 they'll have rebased rates, which will be lower and more in line with market rents. So it's not perfect.
Yeah.
It's been hard this year, but it will get better again next year. But industrial are the ones that have really had their hikes because rateable value is pegged to market rents.
Right.
And because market rents have gone up 30%, guess what happened when the new rates came for industrial? Well, they went up and they're going up again next year.
Right.
So industrial occupiers are the ones that are suffering more than retailers actually. Yeah. And this is why you can't just believe what you read in the news, and you've got to educate yourself and, build your professional network and really understand what's happening on the ground if you want to invest.
That's interesting, isn't it? And you've said of all the commercial sectors, retail has done well because, of course, this is a short-term pain period, which hopefully most businesses will be able to see through. Do you actually think there's a revival of people going back onto the high streets? There's more footfall? Because I know there was this whole talk about high streets are dead and all of that.
Again, not all high streets are equal. So no, not everywhere. But you've got to know what an investable high street looks like and what it doesn't. And lots of the big towns are struggling to revive all of their retail because actually the way that we shop and the way we work and the way that we play has changed forever.
Yeah.
And that means there's too much retail in some of the big towns, and it does need repurposing into maybe leisure, maybe residential,
mixed use.
But we don't want to get involved in that. We want to go back to those locations when that's happened.
Yeah.
So we want to invest in the smaller towns that are not near a big city or a big town, and they serve themselves, and that is where everyone goes to get their business done.
Yeah.
And that's where you want to invest.
Well, that's interesting to focus on. There's still the primary high streets in those areas, but you're saying there isn't a local big retail park somewhere or a massive Westfield somewhere near there, and that's where you should look at doing.
And that's where you should go. Some brands, some independents, good mix of uses.
And what about these whole retail outlets that have come up and shopping centres. How is that doing in general? And are you involved with any of that stuff or invest?
So retail parks are the top performing sector in retail. They're going from strength to strength. I haven't invested in one yet, but I will be starting to look. But what I really want to do, because I come from a shopping centre asset management background, is I want to buy myself a small shopping centre.
You should
That's
be.
my ultimate.
Well, apparently they're available for like £1 in some of the auctions.
Well, yes.
So you missed that opportunity.
Obviously, it has to be the right mix and the right location. But yeah, my shopping centres are doing well again now. So their values are coming back up. There's new entrants. The rents are starting to go up.
Yeah, but that's great
shopping
news.
centres are coming back as well.
Brilliant. So then what else have we not talked about? There's storage,
yeah,
warehousing.
I mean, you've got some more niche areas of commercial. So storage is one niche. Cold data storage is another. Renewables is another. But they're very, very niche. And if you're new to commercial, my advice would always be to stick with the main sectors to get started. Yeah. And kind of learn the nuts and bolts. It's a bit like starting with buy-to-let in residential before you graduate into more sophisticated strategies, like HMOs and supported living and commercial conversion and all of those. I would say start with the main sectors,
easier retail and office. So going back to, let's say you're starting out and retail is what you want to look at, for example, would you look at just shops and uppers, maybe with a yard at the back? What's the kind of typical deal that someone starting out in commercial or mixed use world would want to do or should be looking at?
Well, buy something with tenants already in it. Make your life easy. Do a paper exercise as investment first. Yeah.
So, but the whole building is let to someone.
Yeah.
And that's it.
Multiple tenants, ideally.
Yeah.
Or if it's a really strong tenant, like a brand.
Yeah.
Then buy it well now. Yeah. So either cut your teeth on a low value, high yielding commercial buy-to-let, or on a tenanted investment that you can add some value to, but you've got your return from day one. So you've completely de-risked it for yourself. Yeah. Particularly in this market. But what I always say to everyone is there is no one size fits all, because actually where we start is at the end. So where do you want to get to? What's the reason you want to invest in commercial property? So a lot of people come to me and say, I've actually got some good cash flow from my residential portfolio and I do want to build on it and I need to replace some. But actually what I want is to be more hands off. Yeah. And so then that kind of dictates the strategy. So I will always say, where are you trying to get to? And let's work backwards from there, rather than, well, you could start here, you could start there, because actually what we want to do is build the portfolio that you want, not the portfolio that you could build.
Yes.
Because there's lots of things you could do, but what's the right thing for you to do?
Yeah, no, absolutely. I mean, this is what I've been thinking about myself. And having come from a pure residential, well, I do have a few commercial in my portfolio where we bought mixed use, or we bought banks and we've bought even retail, but kept the ground floor as commercial and then converted the uppers and at the back and whatever in residential and either sold or held on to it. But what my dream was to replace my residential portfolio income with my commercial portfolio income in 5 years. I'm giving myself a good time. And then probably sell my residential portfolio. Well, hopefully the time is right. But for someone like myself, what would you sort of say when you start?
I'd say the same thing. I'd say it also depends what capital you're starting with. But I would say be open to unlearning everything you know.
Yeah.
Because that's it. Commercial's just different.
Yeah.
And you can invest remotely. So firstly, I would say invest remotely outside of the Southeast if you're in the Southeast, because you'll get higher yields, your capital is going to go a lot further and you're going to build that portfolio faster. Yeah. So try to get comfortable with that, which many of our clients do quite quickly, actually, once they understand how it works. But I understand that it's uncomfortable.
Because, with residential, like invest within 45 minutes of, where you live, because, it's much more hands-on. Yeah. But I get that. And that's really what the commercial is about, right? Yeah. Is hands-off. Is having a lifestyle.
And also, you're an experienced investor. So if you're an experienced investor, do the biggest deal you can do, because every deal is the same amount of work.
Yes.
You have costs for every deal that you do. So do the biggest deal that you can do.
Yeah.
Make a big step. Don't make a small step, because you're not just starting in property investing. Yeah. You're experienced. You know what you're doing. You've got something to learn. So a new market to learn. Yeah. think about things a different way. But be brave.
Be brave. Be bold. Yeah.
This is a great buyer's market. So be brave in this market.
Would you suggest office, retail?
Office and retail are your highest yielding. So if you're trying to build income, definitely. If you're investing pension and you want something really safe and secure, you might look more at industrial. Not because retail and office aren't safe and secure, but it's a bit lower yielding.
Yes.
It's a bit slower and steadier.
Yeah. That's not me.
But
I'd need more. Sounds amazing.
If you want the high yields, then office and retail. Yeah.
Amazing. So tell us all about, we've talked about all the amazing stuff, and it's amazing to know that retail is doing so well, and great to hear some positive news in the commercial space. Tell us about a deal that maybe you wanted to buy or you should have bought and you didn't, and something that went wrong as well.
Oh, so this year I should have bought. Honestly, I got busy like we do sometimes, and I missed this deal in auction, and it was a 15% on purchase. It was I suppose you could say it would be me stepping into getting to a shopping centre. So it was 8 units in a little retail arcade.
Yeah.
Perfect for asset management, some short leases, like all the things I know how to do. And I just didn't get through the due diligence in time, and someone beat me to it.
Oh, was it in the auction,
but I wouldn't have been in the auction. Somebody bought it prior.
Oh,
and I was going to make a prior to auction offer, and I just didn't get my ducks in a row.
Yeah.
So that was annoying.
That was annoying, but now you've got that drive to go and get the next shopping centre.
I know, I'm not missing the next one.
But you might do something bigger and better, right? Hopefully.
Well, yes, that maybe it just wasn't meant to be.
That's what they say. There's always a reason. The one that got away. And what about something that didn't go very well?
Well, I tell you what hasn't gone very well for us this year is the developments that we've done. It's been really difficult to exit, and that's meant that our interest costs have racked up and have eaten all of our profit.
Yeah.
So we're not going to make money out of the developments that we did because it's taken us so long to exit, because the interest rates on the refinance and the loan to values aren't there.
Rebridging it or whatever you need to do, extend the loans.
The sales market has been terrible,
dire,
and slow, and so
especially for apartments, right?
Yeah. So we're having to sell at much lower values than we forecast because the market moved.
Yeah.
And, but this property's a long game.
Yeah.
Okay. So the market moves and there's not much you can do about it. So you have to take it on the chin.
Yeah.
And
absolutely. We're not going to never all get it 100% right?
No. And look, they're all good, strong cash flowing assets. They're just not as valuable as they should be.
As what you had when you had done the due diligence.
And we've got to pay the investors out and stop the interest accruing. So you have to make these decisions.
Absolutely.
And so they kind of haven't gone really, really wrong. It's more a timing and market.
Yeah.
And we didn't get the profit out.
And this is not something that you could have foreseen, because it's the market at the end of the day, right? It's a demand, and it's where we are with the residential market, basically.
Yeah. And so we are selling for what we can sell for, paying investors out.
Yeah.
We will have some money locked in
for a little bit.
So then we'll do some new deals, because the buying market's great. So we'll do some new deals.
You'll make it somewhere else.
We'll turn it around. And that's the view that you have to have in property, because it's a long game.
And also, is it like you feel that when you sort of steer away from that whole commercial to commercial, you end up getting burned sometimes?
Yes.
Like in your world, it's always been commercial to commercial is where your knowledge was, right?
Yeah.
And when you've steered away from that, you found yourself in a bit of
we did do a commercial conversion because my business partner wanted to. And so I said, okay. And I'm never saying that again, because now we own a house that we don't want to own, that we can't sell at the moment in this market. But we've got an investor who we need to, so we're having to work with the investor, which we are.
Yeah.
But we've ended up in a position that we don't want to be.
Absolutely.
And it's distracting, and and we're both, we won't do that again.
You need to buy that shopping centre soon.
We're like, let's just stick to commercial. Like, we don't know why we just did it, because we knew the area and it was looked like a good deal.
It looked like a good, numbers were good.
And
on hindsight, would you have done like offices upstairs or something like that?
Not in that location. It wouldn't have worked. In hindsight, we wouldn't have bought it.
Yeah, absolutely.
But
there are those days. We've all done it. Absolutely.
Just,
so tell us all about your travel, and how does your travel, because I know you love traveling and you're off to Mexico soon. But tell us about how that influences your sort of commercial investment world, and tell us all a little bit more about that part of your life.
What it does is it pushes me towards being as hands-off as possible, which means I'm only doing asset management deals. I'm investing my pension at the moment in very simple investments, high yielding income purchases, nothing for me to do. Because I want to have the time freedom. I want to be able to be away for long periods of the year. So I go away for 3 to 4 months of the year now. I'm working my way around the world. You know, Amazing. I've been to Indonesia for a month recently. I'm going to Mexico for the first time. I've done a lot this year. I get to travel with my mum, which is great. You know, who knows how long she'll be able to travel for.
Exactly. You don't know how long you've got them for, right?
We do it while we can. I love being in different parts of the world, experiencing different cultures. I think it gives you great perspective.
Yes.
Because you can get really chewed up especially because it's been hard the last couple of years. Yes. You know, everything changing constantly, lots of volatility, uncertainty, market changing. It's a down market, difficult decisions to make. And actually what travel does for me is it frees my mind from all of that for a good period of time. And it helps me be more creative and make good decisions.
Yeah.
From a better centered space, you know, than being right in it all
and
the
it's
time.
fine. Do you not find that when you're in a space where you're just kind of relaxed, you get ideas just like,
walking down the beach.
Yeah. Just walking down the beach. Oh, I could do this. Or
I have to write a note on my phone so I don't forget it.
I find that it gives me ideas when I'm just kind of in that zone, in my own little, like a fun zone.
Yeah.
And so what's next for you? I mean, you've got this commercial agency. Tell us all about that, how you can, help people like myself possibly or other
Well, what we found
investors.
over the last 3 or 4 years in particular is that a lot of our clients come to us having done all the hard work of build a residential portfolio. They're a bit tired or they're a bit time poor, or maybe they're still professionals working in corporate and they've got pensions to invest.
Yeah.
But the theme is that lots of people are quite time poor. They've got families they'd like to see more of.
Yeah.
They'd like to find some time for themselves and not spend their whole weekends working.
Yeah.
So we've built an agency and we acquire commercial property on behalf of our clients to their criteria, and we do it for them.
Simple.
Essentially. So there's 3 of us in the team at the moment, all chartered surveyors. There'll be 4 by next year. We're doing 3 to 4 deals a month, most months at the moment, and that's what we're building. That's where the demand's coming from. So we're here to serve it.
Amazing. So that's probably the best way for someone like myself to get in touch with you if they're looking for a hands-free acquisition.
Yeah, and we'll teach you along the way as well.
Yeah.
So we've kind of put together a package where you can learn along the way, but we're doing it for you, keeping you safe, stop you making mistakes.
Yeah.
We'll find deals that you might struggle to find yourself because we've got obviously the network and the pipeline and we know where to look. And it's not on Rightmove Commercial.
Yeah, absolutely. So what's the kind of minimum investment? Because I know you are also doing Midlands, up north, all of that. So let's say someone wants to not go big, but just start off small or medium.
Ideally, your minimum is 300,000.
Cash.
So you can start with 200, 250, but it's more limited, it's more competitive.
Yeah.
Harder to get the higher yield.
But people can access money from investors and things as well, right? It's not necessarily your own money. Maybe you have some of your own money, top it up with maybe some investor funds.
It can be pension, it can be your own capital, it can be releasing equity from residential, which a lot of people are doing at the moment where they can, or it can be investor finance.
Yes, and the beauty about SAS and SIPs are amazing, right? Because it's regulated, but for mostly they're not investing in residential. But for commercial, it's a great opportunity to use the SIP and SAS funds.
Yeah, so it has to be the right provider, but as long as they allow commercial property investment, then the investment goes directly into your pension and you can asset build and income build.
So you buy it off your pension. Let's say you buy your pension buys it or your SAS and SIP buys it. You add your value, then your SIP and SAS goes up and it's tax-free.
Correct.
The profit, you don't have to pay any tax on it. That's a great way of buying.
I mean, and I know there's inheritance tax now on pensions, but that's a longer term problem. And it's about thinking about keeping a cash balance in there at a time when you think that's appropriate. But until such time, keep calm and carry on is what we say about investing pensions.
Yeah. investing your pensions in commercial property. It all seems great and exciting, and I wish you really well. But before you let you go, what would you tell or give some tips on people just starting out in commercial property from a residential angle, or someone just completely new into investing but thinks residential is definitely not what they want to do and they want to start investing in commercial? What would you say minimum? I know we talked about the amount of money, but what would you say for them to take steps on how to become savvy commercial property investors?
Well, I would say start getting interested in business, because business is everything in commercial property. So you need to start keeping up with the business press and read the commercial property press, and then start connecting with commercial property professionals in your area, or find some networks where people are investing in commercial property. Contact me if you need some. I'll tell you where they all are.
Yeah.
But get involved, and that's what you need to start doing. But you also need to get really clear on why you want to invest in commercial property. What's your key reason? Is it time? Is it income? Is it capital growth? What is it?
Yeah. Could be a combination of these things.
It could be a combination, but what's the priority? Have a priority and lead with that.
Yeah.
Because a lot of people come to us and they're a bit confused.
Yeah.
And the first thing we'll do is help you, or I like to do with people, it is help you get clear for yourself on, well, why do you want to do that though? What will it give you? So what's the real reason that you want to invest in?
Is it cash flow,
property?
or is it, as you said, building your wealth?
Those are kind of a reason, but it's not actually the deep down reason. So I get quite deep with people, Manni. I get quite, but what do you... So if you had more time, what would you do with it? And then people start telling me the interesting stuff. I get back to scuba diving, or go and learn Spanish, or I just spend a lot more time with my children. Yeah. Oh, well, actually, I'd be a lot fitter.
Yeah.
And all these things that are important to you come out. And that's, why I don't work 24 hours a day anymore.
Yeah, it's amazing. So tell us your vision for I know you've got your agency and you're building that up, and that sounds like you're really doing very well. What's your kind of next 3 to 5 year vision? Have you got one already, or?
Yeah, so my vision is to have completely worked myself out of my business and work in it when I want to, rather than when I need to. And I'm getting there. I want to carry on traveling for 4 months of the year, maybe even extend that even a bit more, who knows? So I want to carry on with my traveling. I want to invest in really straightforward asset management deals, and I want to do one at a time. So I tell you, something I've learned is stop trying to do too much, more than you can actually cope with, because you don't do anything well when you do too many things at once. So I want to do some really interesting investments one at a time, and slow down. Slow down. That's what I want to do.
Slow down, but do bigger deals, but fewer deals.
Yeah.
Yeah, that sounds like a great time, and you're just having the time of your life while you're doing it as well.
I'm having a great time. I have no complaints.
Amazing. Well, Kirsty, thank you so much for your time. I know you're about to catch a flight very soon, so I really appreciate you really giving me your time today. It's been a great chat. It hasn't felt like a podcast, has it?
No, I know not.
I told you.
It's just a chat with Manni. So thank you for making it easy.
And thank you for coming, and thank you so much for your time, Kirsty.
Thanks, Manni.
Guys, if you enjoyed watching that, please do like, share, subscribe, and comment for regular property updates.